So my own take is that, that the April-June quarter this year was expected to have a very high rate of growth because of the very low base last year, the negative 24%, and this was, going to be somewhere, between 15 to 20%. That will probably be still in double digits, but in the lower double digits. And that's the way I would want to look at it, not having specific numbers. And to point out here that still the agricultural sector will hold its own because that's thankfully not been affected. And the services sector, the impact would be perhaps the highest, and that's also cumulative. But overall, I think this quarter, April to June, will see a recovery which will be much weaker than what we had estimated when our recovery started in the last quarter of fiscal 2021. So that's my estimate as we go forward. But I expect the economy to come out of it by the beginning of July.
What do you think could be the downside risks? Because we're yet to vaccinate a large part of our population, and besides that, the risks of a third wave looming large as well.
Well, that's the major downside risk. You got it right, which is the uncertainty and the fact that we cannot predict or estimate or quantify what the third wave may look like, what shape it will take, regions it will affect. So that's the downside risk. But I think we've now learned a lot from the first and second wave, and I think we therefore are much better prepared in many, many ways. And we are now, in some sense, learning how to respond locally to the wave, to the nature and the intensity of the wave, rather than take a sort of a large one-size-fits-all approach towards tackling it. So I think in that sense, whatever be the nature and contours of this third wave, the economy is likely to suffer much less than what it has done, whether in the first wave or in the second wave, simply because of the learnings that we've acquired from our experience and the development, the growth of the health infrastructure, the availability of the vaccines, which will start on a much higher note from July, and the fact that, as my colleague Dr. Paul said, that between July to December, we hope to acquire more than 200 crore doses of the vaccine and ramp up our vaccination program so that people's own fears of moving out, of consuming, etc., will also be addressed.
Do you perhaps believe that given the fact that there are downside risks, there is a case for a lower GDP forecast that we can make at this point of time?
Ruchi, I don't think so. I don't agree with those who are lowering their estimates in such a hurry, because my own estimate is, and again, this stands to the caveat applies, which is that the nature of the third wave and how it turns out to be. But as I said, the strength of the recovery which will unfold will surprise everyone. And to that extent, I expect those agencies and entities which have reduced their estimates for FY22 now, revising them upwards as we go into the fiscal year and towards the third quarter. And I think given all the reform measures that have been already taken and those which are in the pipeline, and the government's commitment to stimulate investment recovery and to undertake large-scale public capital expenditure, all would imply that we still may well have the same 10.5% rate of growth for FY22 as has been estimated.
Don't you think the time to press the pedal on any kind of fiscal announcements is perhaps now, at early on, as we're coming out of the second wave?
We, in Niti Aayog also, we have always maintained that yes, a higher fiscal spending, not caring too much about the fiscal balances at this stage is all required, and we should be doing that. The question remains about the nature of the fiscal stimulus, and I still maintain quite strongly that we don't need helicopter money in the economy at this stage. Just to sort of on the hope that will stimulate consumption, and that will then revive investment in the economy.
And I want to understand from you, Niti Aayog has also made a slew of recommendations on the privatization of PSU banks as well. Given the fact that COVID-19, of course, has really put in a lot of delays as far as the privatization process, where do we stand on those two key issues, on asset monetization as well as privatization of banks? Because the markets were very enthused with the kind of reform announcements in terms of privatization that were made in the budget, but the second wave has put a lot of spanner at work. So where do we really stand on that?
Well, the good news, I think, is that despite the second wave, in the 2 months that have been completed since the beginning of the new financial year, which is April and May, a lot of work has been done on both those fronts, on asset monetization as well as on selecting candidates for disinvestment and privatization. And that work is all the preparatory work has gone on in the government, is being monitored on a very regular basis. And given the sort of robust, the bullish nature of the markets, the equity markets out there, and the preparation that has gone on, I feel quite confident, actually, that those targets announced by the Honorable Finance Ministers on both those counts will be met, despite the COVID, despite the second wave, and despite the sort of localized lockdown that we have had. But let me again assure you with all the confidence and all, on my command, that this has all been done very carefully, and this is work that's gone on in an interministerial, the whole of the government sort of issue basis, and you will see that announcements are made that the choice has been made very rationally and on the basis of as much data and information and empirical evidence that we could gather.